The KL High Court ruled today that some 600 employees of Utusan Melayu, Malaysia, who agreed to a voluntary separation scheme are considered trustees and not creditors. Judge Nazarin Waknordin said he found all the properties of Utusan are to be included and added to the set definition of trust properties and is satisfied that the elements of a trust has been proven and therefore a trust can be said to be implied. Since the court is of the view that the employees in the scheme are beneficiaries of the trust properties, he said they stand outside the liquidation process and are entitled to the benefit of the trust properties. His decision, delivered via email, was cited by theedgemarkets.com. The employees who signed up for the exercise are still owed nearly 60 million ringgit in backdated wages and benefits. Nazarin pointed out there were only 8 payments made by Utusan Melayu, formerly controlled by UMNO, to the staff involved prior to a creditor's voluntary liquidation exercise in October 2019. In a letter dated October 8, 2019, Utusan Melayu Chairman Datuk Abdul Aziz Sheikh Fadzeh had stated that a deal had been arrived at, whereby payments owed would be made using proceeds obtained from the sale of Kumpulan Utusan assets. Nazarin said this is evidence of the media company's purported commitment to do so. Globetronics Technology saw its third quarter FY22 net profit fall 21.4% to 12.78 million ringgit, down from 16.27 million ringgit a year ago, mainly on lower volume loadings from some of its customers. The contract manufacturer of semiconductor-based products and services recognized higher tax expenses of 2.3 million ringgit in the quarter under review, compared with 900,000 ringgit a year earlier. This, however, was offset by a higher foreign exchange gain of 3.9 million ringgit, up from 900,000 ringgit a year before. Quarterly revenue declined 17.3% to 46.03 million ringgit, down from 55.66 million ringgit in the same period a year ago. Looking ahead, Globetronics noted the semiconductor industry continues to experience challenging macroeconomic and geopolitical issues, resulting in supply chain disruption, uncertain end demand, rising inflation, and manpower shortage. It said it has taken measures to minimize any potential exposure or disruption arising from these challenges and expects its FY22 fiscal performance to remain satisfactory. Shares of Globetronics finished 0.95% higher at 1 ringgit 6 cent, bringing it a market capitalization of 709.61 million ringgit. Independent advisor MainStreet Advisers is advising shareholders of real estate player Mulpha International to reject an unconditional voluntary takeover bid by several joint offerors, as the offer price of 2 ringgit 30 cent per share is neither fair nor reasonable. MainStreet Advisers said in a circular note that based on the revalued net asset value approach, the offer price per share represents a discount of 14 ringgit 92 cent or 86.64% of each Mulpha share. Plus, the joint offerors intend to maintain Mulpha's listing status. Based on this and its evaluation, MainStreet Advisers said it is of the view that the offer is not fair and not reasonable, and that shareholders should be advised to turn the offer down. According to a stock exchange filing by Mulpha, the offer price of 2 ringgit 30 cent represents a 10.05% premium for the 5-day volume-weighted average market price or VWAP of Mulpha shares up to September 22nd of 2 ringgit 9 cent and a 9% premium for the 1-month VWAP up to September 22nd of 2 ringgit 11 cent. However, for the 3-month VWAP of 2 ringgit 13 cent, the offer price translates into a discount of 7.98%, while for the 6-month VWAP of 2 ringgit 19 cent, the offer price translates into a discount of 5.02%. Against the 1-year VWAP of Mulpha shares up to September 22nd of 2 ringgit 39 cent, the offer price represents a discount of 3.77%. At the close, Mulpha's share price was 0.44% lower at 2 ringgit 28 cent, giving it a market capitalization of 709.5 million ringgit. Bursa Securities has rejected piling and foundation contractor Top Builders Capital's request to extend the issuance of its annual report 2022 by another 1 month to November 30th from the stipulated timeframe of October 31st. In a stock exchange filing, Top Builders, formerly known as Ikmas Jaya Group, said it is currently working with auditors to revise the timeline for completing its audited financial statements before the October 31st deadline, failing which it said it will make the necessary announcements relating to delay in issuing the annual report 2022 at least 3 market days before the deadline. The PN17 company is still in the midst of formulating a regularization plan to address its financial condition. It first triggered the PN17 criteria in June 2020 when its external auditor KPMG had expressed doubts about the company's ability to continue as a going concern. Its equity on a consolidated basis was also under 25% of its share capital. Still, its latest results for FY22 showed that Top Builders had returned to the black after 4 straight years of net losses. Top Builders shares closed unchanged at 3 sen, bringing in a market capitalization of 21.18 million ringgit. The EPF, a substantial shareholder of SP Setia, voted last Tuesday in favour of the builder's proposed resolution to undertake a cash call to raise 1.04 billion ringgit. The cash call via a renounceable rights issue of new Class C Islamic Redeemable Convertible Preference Shares (RCPSIC) was proposed at the group's EGM last week. EPF said this in a voting decision notice published on its website. The retirement fund holds a 5.51% stake in SP Setia. In a separate filing with Bursa Malaysia, SP Setia said 99.9% of shareholders gave their support to the resolution. To aid the implementation of this proposed rights issue, SP Setia also proposed to amend the company's constitution, an idea that received some 99.9% support. The property developer fixed the issue price of its rights issue of up to 3.07 billion RCPSIC at 38 cents each. Shares of SP Setia traded 3.61% higher to 43 cents, translating to a market capitalization of 1.73 billion ringgit.